Welcome to RipplEffekt. I'm your market correspondent, reporting live on the Atlanta commercial real estate landscape. Atlanta's metropolitan footprint continues to pulse with development activity and capital deployment. The city remains a critical hub for logistics, tech relocation, and multifamily expansion across the Southeast. Today we're breaking down what's moving the Atlanta market right now, and what smart investors need to watch. The macroeconomic backdrop for Atlanta remains moderately supportive, though shaped by persistent inflation and steady monetary policy. The Federal Reserve's funds rate sits at 5.33%, holding firm as policymakers balance growth concerns against lingering price pressures. Year-over-year inflation stands at 3.4%, still elevated relative to historical norms but showing signs of moderation. The 30-year mortgage rate has settled at 6.55%, a level that continues to compress returns on both acquisition and refinance opportunities. Locally, Atlanta's unemployment rate stands at 3.7%, reflecting a labor market that remains relatively tight. Let's focus on the critical data points shaping investment decisions in this market. The 30-year mortgage rate of 6.55% remains a ceiling for acquisition financing. It's elevated relative to pre-pandemic baselines but priced into most institutional bid models at this point. The federal funds rate of 5.33% continues to set the cost of capital across the broader economy, influencing everything from bridge loans to preferred equity pricing. Inflation at 3.4% remains a headwind for net operating income expansion on triple net leases and long-duration ground leases. Unemployment at 3. Three structural trends are reshaping Atlanta's commercial real estate trajectory this summer. First, the rate environment has created a durable bid-ask spread in core assets. Sellers remain anchored to pre-rate shock underwriting, while buyers are disciplined and seeking 150 to 200 basis points of additional yield. That friction is actually healthy. It's separating motivated sellers from opportunistic holders. Second, multifamily construction continues at elevated levels, driven by population inflows to the Southeast corridor. But absorption rates are compressing as new supply comes online. Now, let's examine a curated opportunity from our active listing database. We've identified one standout property in the Atlanta metro that warrants your attention. 500 Sandy Point Road in Knoxville, Georgia is listed at $200,000. A single-family residential asset spanning 1,794 square feet with 4 bedrooms and 2.5 baths. What makes this property compelling for value investors is its pricing. $111 per square foot sits 13% below the zip code median, representing a 10% discount to recent comparable sales in the submarket. The property has spent 83 days on the market, which signals motivated seller dynamics and room for negotiation. Atlanta remains one of the most dynamic real estate markets in the United States, and the current macro environment is creating both clarity and opportunity for sophisticated investors. Rates are settling, absorption patterns are normalizing, and submarket selection has never mattered more. RipplEffekt tracks every data point, every transaction, and every structural shift in this market so that you don't have to. Our team has prepared a full intelligence brief on today's Atlanta market conditions, our recommended deal flow, and forward-looking risk scenarios. Visit us at RipplEffekt.com for the full intelligence brief.